Hello, Maverick traders. This is Rob Reinhold. It is Tuesday, September 6th. And just like we expected there to be a very nice trading week after the Labor Day holiday. It usually is every year, but we already had a really good market going into August. So we just got great moves over the past couple days. So let's jump into what's already happened this week in the markets. So if we take a look at the markets today, we have a little bit of daily news here. We heard from the Reserve Bank of Australia last night, and they raised rates by 50 basis points as expected, and there really wasn't any movement off of the Australian dollar. When the equity markets opened here in the US, we had a pretty big sell-off in the morning, and cryptos went along with the equities. As you can see, cryptos were down 6.2%. So we had a risk-off move, but it wasn't a terrible day, but it was just a down day altogether. And you can see every asset class sold off. We've got the S&P down 0.4%, world equities down 0.5%, gold down 0.5%, oil down 2%. So if we take a look at the charts here, I want to bring up the S&P here, and I drew them some Fibonacci lines. And for those of you that aren't familiar with Fibonacci lines, basically this 50% line is kind of the line in the sand. If you have a market rally, you measure from top to bottom, it says if it breaks below the 50%, then this move is likely to get wiped out. So here we are heading down, and as soon as we broke below the 50-day moving average at Maverick, we said, hey, it's now time to be more bearish than bullish. We pared our bullishness back all the way down, and now the market's telling you to be more bearish. And so now we're looking at these really key levels, and I think the next key level here is really going to be this. I guess there's a little bit of support right around here, but you can see we've been trying to break it the last 2-3 days. I think we're going to be heading down to this next level of about 3,800 here on the SPX. So we're still fairly bearish on equities. If we come over here to world equities, this is the VT, the world index, and you can see that we are even further down below the 50% line. 50% line is probably right here at about 89. You can see we're just heading down pretty quickly, and we are approaching the lows that we set in January. So we are still very bearish in equities. If we take a look at the cryptos, we talked about how once we broke this uptrend line in cryptos, and once we broke the 50, we wanted to be more short than long, and all we're getting is bear rallies with sell-offs. So it looks like this is going to be plunging lower. Again, this is a basket of 4 cryptocurrencies equally weighted. We think we're likely headed down into these July lows as well. So a lot of bearishness out there in the markets. So we have been at a -2 here since the weekend. We are at -2, so we're not the most bearish we could be, but we're pretty darn close. And if you take a look, all we're really waiting for is the 50-period moving average to start to slope lower. So once this yellow line here starts to slope lower, we're going to be able to go to a -3, and that is the most bearish that we can be. So let's take a look at what we heard from the RBA yesterday. As I said, we are expecting a 0.5% move. That's what we got. We got ISM services this morning. This number was better than expected. And the market rallied briefly on this and then sold off because this means that the Fed is likely going to be more aggressive. When these economic reports come out better than expected, it's actually bad news right now for the US stock market. Tonight, we will be getting Australia GDP. I don't think it's that big of a deal since we just heard from the RBA. So I think the next big meeting here is the Bank of Canada rate statement tomorrow. So that's going to be a big one. The Canadian dollar had a nice break higher today. We think it's likely to keep that relative strength. And then as you can see on Thursday, we have the ECB rate statement and the ECB press conference. Now we are going to be meeting live as a firm for that press conference, looking to place trades around that meeting. And then as you can see, Friday, we've got employment report out of Canada. Same thing that we talked about, Australia GDP, since we just heard from the central bank, not that big of a deal anymore. So I really think that Wednesday's Bank of Canada and Thursday's ECB press conference, those are going to be the big trades this week. So let's jump into the currencies and check them out one by one. This is where we stood over the weekend on our velocity scores. We said the euro, Swiss franc, and the dollar were showing relative strength, and those were the currencies that you would want to be long. We then had all the cryptos and the Kiwi as the weakest here. So we talked about a Kiwi dollar short position, which I know a lot of our traders took, That's up about 0.6, 0.7%. That's been a decent trade to start the week off. But we were really waiting until Wednesday, Thursday for the trading to really get in gear. We're going to talk about the yen. The yen was absolutely clobbered today. It was absolutely clobbered, and it broke some major levels. So today's performance, you can see cryptos were down across the board. Ethereum continues to be the best performer. It's the best of the worst. They're all going lower. But Ethereum is going lower the slowest, which means that when these things turn around, we want to be long Ethereum, but not until they bottom and turn around. You can see Bitcoin Cash, Litecoin, they were the worst. There's nowhere really good to be long here in cryptos at this point. Switching over to the foreign currencies. I talked about that yen. Look at the break in this yen. We're going to take a look at a yen chart because the yen has broken down about a 3-month low base, and it just shattered it today with a lot of momentum to the downside. Dollar was strong, and surprisingly, the pound and the CAD were strong. We had the pound and the CAD as neutrals. They've been much stronger than we expected this week. We'll take a look at those charts as well. And you can see Aussie and Kiwi were also down slightly. So again, the Kiwi dollar trade that we had on, short Kiwi dollar, was a very nice trade. And we're looking to make more on the Bank of Canada and ECB rate statements over the next 2 days. So let's go in and score all of the currency baskets. Now, our currency baskets are a proprietary indicator we use that takes 8 of the major currencies we look to trade and equally weights them. This is unlike the dollar index, which does not equally weight them. They're not weighted correctly. We like to look at things equally weighted. So this is the dollar equally weighted against 7 other currencies. And you can see that everything is showing that the prices are moving up. We had a nice run on dollar here, and you can see that we have reached a new little swing high. So we think that the dollar is likely to need a little bit of a pause here. So we still like dollar long. It's just a little bit out of gas at the moment. A base or a pullback, we want to be all over that. But for right here, right now, dollar's probably had its move, at least for the first part of this week. Let's take a look at yen. And I actually want to take a look at a yen on a daily chart first, just to show you how critical this break was that happened today. As you can see here, we reached a low on June 8th. So we're basically 3 months later, and we just plunged below that. Now, I want to point out that this has all happened in a very bearish market. We've talked about the yen, how the yen used to be the best currency of safety. And whenever the markets were tanking, you just went long yen and you made a bunch of pips. The Bank of Japan has completely broken the yen. It has not acted like a currency of safety for the last year. So we only like the yen on the short side. We don't think you should be looking to buy yen. We do like the yen short, but as you can see here, we just had a big move, a big burst of energy. We're probably, again, we're already seeing a green candle here, a little bit of a rally or a little bit of a base. We could easily see that in yen, but I think you do want to be a seller of yen. That being said, I think that also you want to make sure that the equity markets are bouncing. I think if we get an equity market bounce, a short yen position is the best trade out there. Let's switch over to the Swiss franc. Now, I've been waiting for the Swiss franc to get a little bit of momentum. And you can see over the last week or so, we haven't had much upside momentum in Swiss franc. It is starting to steepen a little bit. So this is what we like to see. We'd like to see this EMA start to steepen. We do have some overhead resistance right here, maybe this 127. I'm still waiting for the Swiss franc. I can't say that I love it here. I'm actively watching it, and if it does start to steepen in its velocity, I will absolutely jump on it. But right here, right now, it's just not showing me enough. This is going to be a very frustrating dead money trade, a very slow mover if you're looking to be long Swiss franc. We come over here to the euro. We can see that after a big jump in euro over the last couple weeks, we're now consolidating some of these gains. So we're on this very small downward bear or bull flag pattern. Anything going to break up, again, I'm just waiting for the euro to also give me some more velocity to the upside. Maybe a clearing out of this 123.80 area in the basket would be a clear signal that this thing is ready to go. But like I said, this same thing as Swiss franc. I like them long, but not right now. Let's switch over to pound. because we had pound on the weaker side. And you can see that the pound has decided it wants to have a sizable bounce. I'm going to take a look at this one on a daily chart as well, just so we can get an idea. We've been short pound, and we've liked pound short for a long time. And you can see that once we broke through these support levels, we just had virtually 3 weeks of selling. It reached a crescendo, and now we're getting a big bounce out of it. So the big question is, where do we want to re-short and enter the pound? I'm looking at this level here. So it looks like we got a little bit more upside until we get into this resistance area. So I think the pound right now, if we take a look at a 4-hour chart, which is what we use to measure our velocity, the velocity is still to the upside on pound. I am not looking to be long pound. I am looking at this purely as a bounce so I can get re-short the pound once it finally turns over. But I am not going to chase pound to the long side. Look, I already have good currencies out there. I've got dollar, I've got euro, I've got Swiss franc. Those are all better choices than this short-term bounce in the pound. We come over here to the CAD. The CAD has had a great week this week, and you can see a very, very steep EMA line here showing us that this has got a lot of momentum. And if we take a look on a daily chart, we can also see that we are clearing out of some pretty major resistance areas that have been holding for the last 3 months. So for me, CAD is actually even better than dollar at this point. I like the CAD better. Now we are going into Bank of Canada tomorrow. So you do need to be careful because we always know that we have no idea what central bankers are going to say. We have no idea what the market is going to, how it's going to react to it. We don't really like getting in before the announcement after a big run. I'm looking for an entry after the Bank of Canada announcement tomorrow. So I do like Canadian dollar. That is the top currency on my board. If we come back over here to the Aussie dollar, this is the daily chart, and you can see the Aussie dollar's really just been in a range for the last month. If we go to the 4-hour chart, you can see that there's actually some pretty good downside here. We've got a downward sloping EMA that's starting to get more steepness. Look, we had steepness here. We leveled out. We're starting to get steepness again. So I think the Aussie is absolutely shortable here over the next 24 hours. If we go to the Kiwi, which was my favorite short of the week, you can see that the Kiwi has, again, we're starting to see some steepness in the EMA. We're starting to see the RSI breaking down to lower levels. So to me, the Kiwi still looks like a good short, even though we might have a little bit of a bounce. We've had a pretty sizable move over the last 5 or 6 candles. A little bounce during the Asian session would not surprise me at all. I want to be a seller of Kiwi going into this next 24 hours. Let's take a look at all the movement here. So this is where we started the week off. We liked euro, dollar, Swiss franc on the long side. We were looking to be short the cryptos and short Kiwi and short Aussie. Now, the most notable thing that has happened was the yen has completely gone from 0 to -3. It looks very bearish now. We think there's likely to be a little bit of a bounce, but you want to be a seller of yen, especially if the equity markets can bottom out and put in a couple up days. That would be a green light to be short yen. Until then, I'd rather be short Kiwi than yen. We got a little bit of weakening from the euro. Euro was at a +3, and it didn't do as much. It lost a little bit of the momentum. And then we saw the pound and the CAD both improve, with the CAD jumping up with the dollar. I love this velocity score page because we usually have stuff in the middle, and I use the term on the shelf. This weekend, I said that the pound, the yen, and the Canadian dollar were on the shelf because they were at 0. Now, all of a sudden, everything's in play. I love when everything's in play. It's telling you that there's a really good trending market at the moment. So you could literally pair up almost everything. Anything that's a +2 or +3 can be paired up against anything that is a -2 or a -3. And you can see there's a ton of crosses. So because sometimes having too many choices is a bad thing, we definitely want to limit this to what we think are the best. And right now I've got CAD and dollar as the best, and I've got Kiwi and yen as the worst. Let's look at those potential trades and those potential setups. Now, when I take a look at the CAD crosses, I want everyone to understand we are running headlong into major news on the CAD, and you may want to wait until after that news is done. My favorite pair here is Kiwi CAD. I'm going to start off with a daily chart. You can see that we're starting to break some pretty key, we've got some key support right where we are. Maybe a little bit more downside. And then this Kiwi, if it breaks, you can see that we are at multi-year lows. I mean, we haven't been this low in a long time. So let's talk actual setups here. Let's go down to a 4-hour chart. We can see that we're starting to get some more momentum. We had a big fall over here. And then all of a sudden you can see that we flattened out in our EMAs. Now we're starting to get some more momentum on this breakdown. For me, I'm just waiting for a bounce to sell into. On the 1-hour chart, you can see that there's not much of a bounce. This is more of a low base. So over the next 24 hours, really 79.35 is where I'm going to have my alert. Basically alert saying, hey, if it breaks below this, this is where you want to look to get in. I would prefer there to be a nice bounce, maybe all the way up here to 79.70, where this last little swing low was. I would love to be short around the 79.70. We'll see what happens. Look, one of these two are going to happen first. It's either going to run up to this 79.70 and it could break out above and then it's a no trade. It could hit that level and fall. Then we want to look to get short, or we could break down below this low of 79.35 and get short there. As I said, we are going headlong into Bank of Canada. If you don't want to mess with the Bank of Canada, then we have to take a look at something other than the Canadian dollar, which we could come over here and take a look at Kiwi dollar. Now look, I'm already in Kiwi dollar, so I'm enjoying this trade as it's moving to the downside. And I've got an eventual target down here at 60.15 is where my target is on this one. If you're looking to make a new entry here on Kiwi dollar, there's about a 0.5% gain. That's right about the minimum I like to go for. I would love to see a bounce. I would love to see some sort of a bounce, maybe up to this level here, where we saw some last bit of support right around this 60.60 area. A little bounce up to 60.60 would be just a great entry point. That's going to give you some more meat on the bone on the trade. So that's going to be the trade, I think. I don't think you want to buy a breakdown here. If you wait till 60.30 until it actually breaks down and your target is 60.15, it's not worth making the trade. There's not enough meat on the bone. So I think the only trade you'd want to make here on Kiwi dollar is if it does bounce up into the 60.60 area, 60.70, turns over, I think that's a good short entry here on that one. And the only other trade that I would want to be taking a look at outside of those was, again, the Swiss franc was starting to look like it's getting a little bit steeper on velocity. And I want to also take a look at some Aussie crosses. So let's take a look at Aussie Swiss franc. This is definitely not a pair I trade a bunch. But if we take a look at Aussie Swiss franc, I look at the daily chart here on this one, and I immediately say, no thanks. I'm not interested. Okay. See how easy that was? I'm not interested. I don't see any momentum. I want this kind of momentum. Look at this momentum. I don't want to trade in here. This is just chop. This is where people get chopped up and their stops get hit. And they weren't bad trades, but they were trading in the chop. You don't want to trade in the chop, so this one is out for me. So really, Kiwi dollar on a rally is the only thing I think is decent over the next 24 hours until the Bank of Canada comes out. And if the Canadian dollar strengthens, man, I'm looking for CAD against Kiwi, the Aussie, and the yen. Let's take a look at CAD yen before I let you go. Here's a daily chart on CAD yen. You can see just a beautiful breakout of a high base on this one. If we come down here, we are at elevated levels. We just had a surge of energy. We expect there to be either a little bit of a wave back, maybe all the way back down to this 108 area, or it's going to high base up in here around this 108.40 to 109. Those are the two things that are likely to happen. Once those change, we want to be a buyer here of CAD yen after the Bank of Canada statement. To wrap this up, there is lots and lots of pairs you can take a look at. I'm going to focus on just looking at the best and I'll keep an eye on everything else. I do think short yen on any equity market rebound. So let's say that for some reason equities go up tomorrow 1.5%, 2%. I think it's a great entry to be short yen. Or let's say that happens on Thursday or Friday, there's a market rally. On market rallies, I think you want to look at short yen first. Until then, I think you want to be long dollar, long CAD, and possibly long Swiss franc. Thanks for joining me. That is Market Roundup. Goodbye, everybody.